Philip Hoffman, founder and CEO of the Fine Art Fund Group. Good to see you here at the conference in LA.
Great to be here.
You are speaking on a panel, how do we value art? And it's such a simple question, but I'm going to assume the answer perhaps is not as simple.
No, it's pretty complex, and I've been in the art business 27 years, having been finance director of Christie's and then running Christie's in Europe, and now I run the Fine Art Group. And what I've learned is that you need superb experts who understand the market. I've been involved 27 years in the market. Now we buy and sell about 10 million of art a week. So it's huge amounts of volume, and luckily, if I look at our track record, we've lost money on like 2 or 3% of all the artworks we've ever bought, and we've made money on 97, 98%, and that shows that understanding, knowing how to value artworks is really based on expertise, knowledge, and thorough understanding of the market.
For investors who look at art as an investment, as a return on their investment that they are seeking, is there a way to generalize long-term returns?
Well, you can either invest long-term in the market, in a sort of like a buy and hold, or you might achieve 5 to 7, 5 to 8% if you don't borrow any money, unleveraged. If you look at what I term the underwriting market, which is a specialist market, you can make as much as 10, 15% return. And if you go into the art lending market, which one of the markets we're in, you can make anywhere between 7 and 15%. So there are different aspects of the market. It's uncorrelated to some of the equity markets and bond markets. It's a very interesting market to be in.
And certainly those returns are better than many equity markets. So I'm wondering if you've seen an influx of investors who perhaps did not consider art as part of a portfolio, but now do.
Our market has grown, or our business has grown 50 times in the last 10 years. I've run this business as CEO and founder for 16 years. I see our business growing from, we're now running about $450, $500 million, and I see that growing to $1 billion, $2 billion over the next few years, just because we're in a very, very niche market. We understand the segment we're in.
When you look at art that will increase in value faster than other pieces of art, is it the artist? Is it the work? Is it the demand?
If I told you the answer to all that, I'd probably have to kill you. But
Please don't.
The answer is that it's a combination of understanding who's buying, which museums are looking at the market, how rare is the work, is it in great condition, and there are about 20 or 30 questions. Every time we buy a work of art, we put a 20 or 30 page due diligence pack together. And I remember something like 15 years ago, a lady bought a work of art based on it matching the colors of the wallpaper on her wall, and she spent 4 or 5 million on a Monet based on the matching of the blues and greens. Now, I would argue that's not a great way to invest in art. My philosophy is I have some of the best experts in the world working for me. We buy and sell about 10 million of art a week, and we understand the market inside out. And if you don't understand the market, don't touch it. If you do have somebody you trust, understand, and what we've seen is that we look after about 125 clients in 23 countries, and what they say is, look, I like the way you look at it professionally, I like the way you understand the market, and you go into great depth, and you look at it from a very common sense viewpoint. So when I started the business, people were coming at it purely from a financial viewpoint. Now major collectors and investors are coming to us and saying, look, we'd like you to put money into art because we see it as an alternative asset class, and we see it a very interesting alternative returns.
Philip Hoffman, great chatting with you. Thank you so much.
Thank you very much.